This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, July 30, 2026, and this is the Tokyo session. Now, let's get into it. The Fear and Greed Index is sitting at 14, deep in the red zone of extreme fear. By all historical metrics, this should be a capitulation event. Yet, look at the tape in the Asian session. Cardano is up 4.5%, Uniswap is nearly 10%, and Bitcoin is holding 64,700. We are seeing a massive divergence between sentiment and price action. Is this a trap for late buyers, or is institutional adoption quietly decoupling from retail panic? We're breaking it down now. Before we dive into the charts, let's look at the macro calendar. We are in the final hours of the afternoon session, but the market's eyes are fixed on Washington. The Federal Reserve is set to release its interest rate decision and updated economic projections today, July 30th. This is the FOMC meeting. The market is pricing in a 25 basis point cut, moving the target range to 3.5 to 3.75%.
Right, and immediately following that we have a data bomb. Tomorrow, July 30th, we get the Gross Domestic Product Report, initial jobless claims, and the Personal Consumption Expenditures Price Index, which is the Fed's preferred inflation gauge. The UMich Consumer Sentiment comes in on Friday, July 31st. So today is the policy pivot, tomorrow is the reality check. If GDP comes in stronger than expected, the risk-on narrative we're seeing in crypto right now could face immediate headwinds from traditional risk assets.
Let's get to the numbers. Bitcoin is trading at 64,783, up 1.44%. Ethereum is at 1,924, up 1.01%. The total crypto market cap is just under $2.3 trillion, with a 24-hour volume of 58 billion.
But the context is critical here. The Fear and Greed Index is at 14 out of 100, that is extreme fear. Historically, when fear hits these levels, it persists for days, sometimes weeks, before a sustainable reversal. Yet we are seeing broad-based gains. Cardano is up 4.59%. BNB is up 3.78%. Uniswap is up 10.24%. Even Litecoin is green at 1.19%. The breadth is surprisingly strong, despite the sentiment reading.
And that's the puzzle. Technically, Bitcoin is holding the 64,000 level, which is a key support zone from the previous week's consolidation. But the VIX, which closed at 18.21 yesterday, suggests that equities are not panicking. The volatility environment is normal, not elevated. So why is crypto sentiment so depressed?
Let's look at what's driving this price action, because it's not just random green candles. There are two major institutional narratives emerging today. First, TD Securities released a report viewing the NYSE tokenization of traditional assets as a potential institutional turning point. Second, PayPay, which owns 40% of Binance Japan, is reportedly seeking an IPO on the Nasdaq, potentially raising up to $1.1 billion. On the sentiment side, the crowd is still scared. The fear and greed at 14 tells me retail is still bleeding out. But these headlines, these are institutional signals. TD Securities talking about tokenization as a turning point is a massive validation of the asset class. And PayPay going public, that signals that major Asian financial players are still betting big on crypto infrastructure.
From a flow perspective, the PayPay IPO news is significant for Binance's ecosystem. Binance Japan is a regulated, high-volume jurisdiction. An IPO there implies a desire for liquidity and transparency that aligns with institutional capital inflows. This isn't retail fear of missing out. This is structured capital.
I'll play devil's advocate here. While TD Securities is optimistic, let's look at the other side of the coin. CoinDesk reported that Bitcoin futures demand has fallen to 2024 lows. Are institutions exiting? And Cointelegraph reported that U.S. authorities are recovering funds from romance fraud schemes. The narrative is bifurcated. Institutional adoption is growing, but retail participation is shrinking due to fraud and lack of yield. We might be seeing a rich man's game scenario where only large players remain, leaving the price vulnerable to liquidity shocks.
So we have strong institutional headlines battling weak retail futures demand. Let's look at the assets. Let's start with the leader of the pack. Cardano is up 4.59% to $0.17. It's showing massive volume relative to its average. Grid, what does the chart say for Cardano?
Cardano is breaking out of a multi-week consolidation pattern. The price is currently at 0.17, which is testing the upper boundary of a range that has held since early July. The structure is bullish, we're seeing higher lows on the 4-hour chart, and the volume expansion confirms the move. If this holds above 0.17, the next technical resistance is around 0.19, which was a local high in June.
On-chain, Cardano is seeing increased activity on the network. We're seeing a rise in active addresses and transaction volume that correlates with the price spike. This isn't a low-volume pump, it's network engagement. When active users rise alongside price, it suggests organic demand, not just speculative leverage.
Sentiment-wise, Cardano is having a moment. Retail traders on Reddit are starting to discuss Cardano again, which hasn't happened in weeks. The crowd is looking for the next momentum play, and Cardano is providing it. But remember, the overall market fear is at 14. When fear is this high, momentum plays can reverse quickly if the broader market doesn't follow. Moving to Bitcoin. Bitcoin is at 64,783, up 1.44%. The headline is TD Securities' note on tokenization. Grid, is this a fundamental support level?
Technically, 64,000 is the line in the sand. We've tested this level twice in the last week and it has held both times. The structure is consolidating, not breaking down. The 50-day moving average is flat, indicating equilibrium. If Bitcoin can close a daily candle above 65,000 with volume, we confirm a short-term trend continuation. But if it fails here, the next support is 62,000.
The funding rates for Bitcoin are at positive 0.07% annualized, meaning longs are paying shorts. This is a mild long bias, but not excessive. It suggests that leveraged longs are still present, but not overly crowded. The stablecoin supply on exchanges is stable, meaning there's no massive dry up of liquidity waiting to dump.
But let's look at the risk. The headlines mention futures demand falling to 2024 lows. If institutional demand is actually drying up, as that CoinDesk report suggests, then the current price support might be artificial, propped up by passive index buying rather than active demand. If the ETHUSD meets with a hawkish surprise tomorrow, say, they keep rates higher for longer, that passive support could vanish. The risk is a liquidity dry-up, not a fundamental sell-off.
Let's talk Ethereum. Ethereum is at 1,924, up 1.01%. The catalyst here is the Pay IPO news and broader Asian institutional adoption.
Ethereum is trading in a tight range around the 1,900 level. The chart is less impressive than Cardano or Bitcoin. We're seeing a bear flag forming on the daily chart, which is a consolidation pattern that often precedes a continuation of the downtrend. However, the Ethereum/Bitcoin ratio is holding above its key support, which is a positive sign. If Ethereum can break above 2,000, that would signal relative strength.
On the network side, Ethereum TVL, total value locked, in decentralized finance protocols is stabilizing. We're seeing inflows into lending protocols, which suggests that long-term holders are parking capital in the ecosystem rather than selling. This is a constructive sign for the medium term. The network is absorbing supply.
Sentiment on Ethereum is actually more mixed than Bitcoin. While the IPO news is bullish, the crowd is still cautious. The fear index for Ethereum is slightly higher than for Bitcoin, meaning there's more skepticism. People are waiting for a clearer signal.
Here's the risk for Ethereum. The correlation between Bitcoin and Ethereum is at 0.891, which is normal, but Ethereum is underperforming the broader market rally. If the ETHUSD creates volatility in equities, Ethereum, being the more growth-oriented crypto asset, often sees larger drawdowns. The current move might be a dead cat bounce if the broader macro environment turns negative.
Finally, Solana. Solana is at 74.69, up 1.58%.
Solana is showing a strong uptick. The price is above the 20-day moving average and the RSI Relative Strength Index is rising but not yet overbought. The structure is bullish in the short term. The key level to watch is $75. If Solana can reclaim and hold that, it confirms momentum.
Funding rates for Solana are negative 0.00%, meaning shorts are paying longs. This is a very short-heavy positioning. A squeeze higher is possible if price moves against the shorts. On-chain, we're seeing increased transaction volume on the network, which supports the price action.
Solana is the darling of the risk-on crowd. When sentiment shifts from fear to greed, Solana often leads the charge. But right now, with fear at 14, the crowd is hesitant. The fact that Solana is green today is a sign that the risk-on sentiment is trying to break through, but it's fragile.
The risk for Solana is leverage. With shorts paying longs, the positioning is crowded to the downside. If any bad news hits, say, a hack or a regulatory announcement, that short squeeze can reverse instantly into a long squeeze. The volatility on Solana is higher than Bitcoin and Ethereum. A 5% drop is not uncommon in this environment.
Apex tie it all together. We have extreme fear but strong price action in Cardano, Bitcoin, and Solana. What's the read?
The data presents a classic divergence. Pulse highlighted that sentiment is at 14, which is historically bearish for continuation. However, Grid showed that technical structures are holding Bitcoin at 64,000, Cardano breaking out, Solana holding momentum. CIPHER confirmed that on-chain flows are stabilizing, with no mass exit of capital. SPECTER rightly warned about the ETH/OMC risk and the weak futures demand, which suggests this rally lacks broad-based participation.
So the key takeaways for today. First, the Fear and Greed Index is at 14, but price action is defying the fear, with Cardano, Bitcoin, and Solana all in the green. Second, institutional headlines around tokenization and PayPay's IPO are providing a floor for Bitcoin and Ethereum, even as retail futures demand weakens. Third, the ETH/OMC decision today and GDP data tomorrow are the critical catalysts that will determine whether this is a sustainable trend or a dead cat bounce. Let's check our weekly calls. It's Thursday, and we have calls from earlier in the week.
My weekly call was Bitcoin bullish, based on the expectation that fear would ease as the week progressed. Reaffirm, Bitcoin bullish, targeting support holding at 64,000 by Friday. The sentiment is still fearful, but the price is holding, which is a positive sign.
My weekly call was Bitcoin bullish based on the technical support at 64,000. Reaffirm, Bitcoin bullish, targeting the 65,000 resistance level by Friday. The chart structure remains intact.
My weekly call was Bitcoin bullish based on stablecoin flows. Reaffirm, Bitcoin bullish, targeting 64,500 by Friday. The on-chain data supports the current price level.
My weekly call was Bitcoin neutral, based on the risk of a liquidity dry-up. Revised call, Bitcoin neutral, new target 63,500 by Friday. I am downgrading my bias because the ETH/OMC risk is elevated, and if the Fed is hawkish, we could see a test of lower supports.
My weekly call was Bitcoin bullish, based on the synthesis of technical and flow data. Reaffirm, Bitcoin bullish, targeting 65,000 by Friday. The institutional narrative is strong, and I remain confident in the support level.
So, four voices reaffirm bullish or neutral bullish, while SPECTER revises to neutral with a lower target. The consensus is that 64,000 is a key level. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the London session, where we will see how these calls play out. Until then, trade safe.